All right, y'all, here we go. Uh, Coming up with video number 2 of the series. And of course, this is what's a chart, what's a stock chart, and how do you read it? Okay, so this is the first. This is picking up from our first video we did with just the basics, just understanding what the stock market was. It was just basic terminology, understanding penny stocks and things of that nature. And now we're moving into a chart because, of course, the chart is vital. It's the key part of this game. That will allow you, of course, with your depending on your ability to read it, to be successful. Okay, so as I like to do it in question format. Okay, and the question simply is, what is a stock chart? Okay, sorry, I had to pause it. I will go ahead and let you guys know, of course, that I'm at home making videos, and at times there's movement. Kids in the back, my wife's moving around doing things, so you might hear things in the video. So I'm just going to go ahead and push through the noise and just kind of live with it. But if my kids call or yell, I'll pause it. And I don't want to yell into the camera. I hate that people do that. Okay. Anyway, back to the point. What is the stock chart? Okay, it's simply a price chart that plots a stock's price action over time. Okay, that price can be shown over different. Let me go ahead. This is I can't help it. I gotta correct that. Hold on a second. Shown. It can be shown over different time frames. Okay, which we're going to talk about. Okay, there are several types of charts that exist. I wanted to actually put animation. I apologize, but sometimes I notice things on the fly, and hey, we're gonna get it right then and there. Okay. All right. Let me go back to present. There we go. Now it comes in like I want. What is a stock chart? Well, this is a stock chart. This is what we're looking at right here. Okay. This is Apple stock chart. I don't know when this is captured in Aprilish. Okay. So anyhow, it just kind of shows you a chart that shows, as the definition gave us, okay, a stock's price action over time. The price can be shown over different time frames. There are several types of charts that exist. Okay, so these plots that they're talking about, each one of these, what is this? A daily. This is a daily chart. Okay, and we know that it's a daily chart because it tells us right here. Up at the top left-hand corner, you have 1 hour, you have day, and then you have month. Okay, this is a daily chart. So each one of these candles that you see, which we're going to go over, don't worry about that if you don't know what it is, because I'm going to talk about it in the next couple of slides. This is a day, right? And this is the plot point of the price action that was going on each of these days. So you can understand how well or not well the stock may be doing, pending your perspective, right? Or really not your perspective, pending your position in the stock if you have one, right? All right, good. So there's several charts. We're going to talk about some examples of this as we come up in these next couple of slides. Okay, the first type of chart I want to talk to you about is a line chart. Okay, so what is a line chart? It's right here behind us. This is Starbucks. This is the current depiction of Starbucks. It is currently sitting at $88.83. And these lines you see here, not the blue and the yellow thick lines, those are my moving averages, which we'll talk about indicators in the following, the volume 3 video. Okay, but anyhow, these lines you see here, these lines represent the price action. Okay, so you're seeing it represented through a line graph, which of course, for trading purposes, this is not what you don't want to use this. This is not good for trading, but I just want to express to you that there are different types of charts. Okay, so this is the first example, a line chart. The next example that we're going to look at is a bar chart. Same Starbucks. Okay, same Starbucks stock. Now here's the bar chart. See, it shows itself in these bars here. Okay, which again you could lightweight trade off of this, but I would not recommend it. Okay, so this is just another example of a chart that you can utilize. And then the favorite and the most used chart for day traders, technical people who utilize technical analysis, is this here, the candlestick chart. Okay. Candlestick chart is extremely important. This will be your lifeline. Okay, so this again is a daily chart of Starbucks, and each of these candles represents one day. Okay, now I know this doesn't make sense to you if you don't know what candlesticks are. Bear with me, we're going to cover what they are shortly. Okay, but the bottom line is I want you to understand that this is the type of basic chart that most technical analysis or technical traders are going to be utilizing, and you can see these on several different time frames. I'm going to give you some live examples of that shortly. Okay, so here's a candlestick chart. Now before we do that, I want to go ahead and just jump into an actual chart. I'm going to move this chart just so you can see. I'm going to go to Disney so you can see that we're live. Oops, Disney. There you go, DIS. All right, so here we go. So here's basically, I use two softwares. One of them is TradingView and the other is Stocks to Trade. Okay, I love both of them. I started off with TradingView, so I have an affinity towards it. I can't let it go. Even though I use Stocks to Trade on a day in, day out basis, I just can't let TradingView go. 1 second, my daughter is screaming. All right, sorry about that. Had to tap in real quick and let my daughter know. Hold on a second. Yeah, apologize. You know, kids, they got like a sixth sense on like, you know, whenever you're doing something important, they're like, all of a sudden they need everything. But anyway, well, I was just basically showing you that this is Disney, and I was telling you that TradingView is one of my favorite software, charting softwares, because I've used it forever. And so anyhow, anybody, it doesn't matter if you already have this charting software, perfect. This is just one that I use. This is one that I like. I'm going to go over at the end a couple of different ones that are recommended, just, you know, that I've heard over time, that I've checked into. But TradingView for me is TradingView overall is number one. Stocks to Trade is one B for me, but I love Stocks to Trade during the market. During the market, for what I do, penny stocks, Stocks to Trade is overall the best. But just I can't get away from TradingView because I've used it for so long. Anyhow, this is Disney. Just so you understand the basics of a chart, right? Right here is time frames. So if you click on this D here, which is the 1 day, it'll break this chart down in 2 minutes. Let's go ahead and look at the 3-minute chart. Okay, so every candle in here, because this is a candlestick chart, every candle in here represents 3 minutes because we're on the 3-minute time frame. Then we have 5-minute, 15-minute. Okay, every candle now represents a 15-minute candle. 30-minute, 45-minute, hour, 2 hour, 3 hour, 4 hour, 1 day, 1 week, 1 month, right? And so this allows you to look at stocks. Let me go to the weekly just so you can get an idea. Every candle on this one represents a week. And this thing now down at the bottom has the time span, right? So when we do it like this, it goes all the way back to 2016. If I take it to the monthly, we'll probably see that it goes back even further, because now look all the way back to 2004. Every candle in here represents a month. Okay, so I just want to give you kind of the basics to what a chart is. Okay, I want to go back to 1 day. Now we have here the time frame. This particular deal. This is how you change. If I wanted to change to a bar chart, I do that and it changes it, right? You see how that works? Oops, not that one. I'm sure. Look at me. I'm screwing it up. There we go. These are the different types of candle, or I should say different types of charts. Some of these charts, I didn't mention them because they're just not needed, right? You're not going to use this type of a chart to trade, right? And so it makes sense for those that it makes sense to, but no, right? So there's line, area, baseline, Renko. This is usually used for Forex trading, Heikinashi. There's several different deals. It all depends on what you're into. My recommendation, when you're new to this stuff, learn it. When I first got in, I was I'll never forget when I first got turned on to this. My dad turned me on and he gave me a class, and in the website they had like 20 different classes. So it's like just imagine being dropped off as an adult in Vegas for the first time, and you just see all of these lights. You don't know whether to go left or go right. And what happens when you have too many options is you actually don't grow in the way that you should in regards to trading stocks, because now you're looking at this and you're looking at that, and you're just, you're trying to blend all of these different systems. This guy likes to use Fibonacci retracement system as his trade. This other guy likes to use, whatever it may be. And then all of a sudden, man, you get lost. And so what I've learned is just focus on, something simple. The less of that other stuff that the better, because actually it doesn't cloud your mind. Okay. So this is how you change that though, right? And then you have indicators. Indicators we're going to talk about later. But just so you understand, like a 200 moving average is an indicator, right? You can put those type of things on. You can also put on alerts if you want to alert a price action. You can make a watch list. Over here I have a watch list. This is my former runner watch list, which would only make, or actually this is my breakout watch list. It would only make sense, I didn't mean to do that, but it happened. It'll only make sense to those who know what a breakout is and what a former runner is. So let me see. All right, perfect. Former runner. This is a perfect example. CLSD. Right here, before all of this happened, this was a breakout, and it broke out to here, and it pulled back, and then look, it broke out again, and it ran. So you got to understand, this stock in December was let's go back. This stock in October was 60 cents, and by before January, this thing hit 379. That's unbelievable type of growth, right? This is why I love penny stocks. They swing, man. I've never seen anything like it. And I've been trading for 10 years and I didn't even know. All this time, because people told me don't mess with penny stocks, it kind of like made me just disclose it. But I realized, like, wow, a lot of things. These are other tools over here on the left that allow you. So like this right here, this line, let me just pull this out. You can draw trend lines, info lines, trend angle, horizontal angles. There's so many things. They've overly diluted what you can do, and it's good if it works for you. But man, sometimes, man, all of this stuff can actually make it hard. I usually just use MAs and lines, horizontal lines for support and resistance. We're going to talk about support and resistance in volume 3. Okay, I just want you to understand the basics of what a chart looks like, how you can switch the time frames and understand that. So I want you to get a live view of that. Okay, so we are still dealing with candlesticks. Okay, let me go ahead and pop back over here to our lecture. Let me hit the present button, and voila, there we go. Here we go, candlestick chart. So I basically told you the basics of a candlestick chart. Now let me give you the understanding. So what is a candlestick? Okay, candlesticks originated in Japan in the 1700s. So the Japanese brought this concept of candlesticks to the stock market. Okay, before the stock market truly even existed. Okay, they show the size of price moves with different colors. Traders use candlesticks to make trading decisions. Okay, so how do you read a candlestick? All right, so let's go to this backdrop. Okay, over here on the left, on most charts, you'll see you can change these colors if you like, but a green candlestick means a candle that was somewhat bullish. A red candlestick means a candle that was somewhat bearish. Okay, and I only say somewhat because depending on how big the candle is, it actually can, that's what I mean by it. It could have been a small candle, small red candle, but I just want you to understand, green means bullish, bullish means going up. Red means bearish. Bearish means going down. Okay. Price is going down when it's bearish. Price is going up when it's bullish. All right. Now, here's what you need to understand about candlesticks. In order to properly read them, you need to understand that if it's a green candle, the opening price of that candle is always at the bottom. And when it goes up, wherever that closing price is where the candle, this is the candle body, is where the candle body will close. This right here that you're looking at the top, at the bottom, those are called wicks. Sometimes there's no wick at all. Sometimes there's a small wick just at the top. Sometimes there's a very long wick just at the top. Sometimes there's a small wick at the bottom. Sometimes there's a very long wick at the bottom. You just need to understand this about the wick. The wick tells you that the stock opened here at some point during the time frame. Let's say this was a 5-minute time frame. At some point during the 5 minutes, the price actually went down here, but it opened here. This is why we have the starting of the body. Price went down here, but it got bought back up, and it created this lower wick. Okay, and then it, of course, kept pushing on up, and then at one point it was this high, and prior to the 5 minutes being up and that candle closing, the price came down and it closed here. Okay, so whenever it's a green candle, the open is always from the bottom and it goes up, and the close is always going to be at the top. When it is a bearish candle, when it's a red candle, the open is at the top. This is where the body starts. And at one point in that time frame, it ran up a little bit, and then it came back down and created that upper wick. Okay, and then it actually started to sell off, and the body closed right here. So in a bearish candle, it's absolutely 100% opposite of a bullish candle. It opens at the top and it closes at the bottom. Okay, so just always remember that when it is bullish, it's green, it's going up. When it is bearish, it's red, it's going down. Okay, that's the easiest way for me to break down a candlestick. Okay, all right, and you might have to watch this a couple times for some of you that it's new, and that's fine. I just want you to understand the basic concepts. Okay, so we just understood how to read it. So as it states here, a bullish bar means the bulls have won, and this is assuming that this is a daily time frame. This would mean that the bullish bar, this green bar here, means that the bulls won that day. And if it was red, as it states here, then it means that the bears won. And if you put the time frame, let's say you put it on a 15-minute time frame, it just means for that 15-minute candle, the bulls won, or for that 15-minute candle, the bears won. So let's not forget, okay, when it is a bullish candle, the open is always at the bottom, the close is at the top, the color is always going to be green, and this in between is called the body. And this right here just shows that during that time frame, price went up here, but it came back and closed here, which is why it has an upper wick, okay, and a lower wick for that matter. So I just want to make sure I'm reiterating, I'm saying the same thing. I want to make sure you understand it, okay. All right, now here we go. Let's look at Starbucks. Okay, so when we look at this, we begin to see like, oh wow, look at all of these green candles. That mean the price was moving up. Okay, and then it had a red day, because this is the daily time frame, and the price began to go down. So it was bearish on this little swing. These little swings down are also known as pullbacks. Okay, so it was pulling back, or dipping is another referred term that people use. Okay, the price dipped down, and then look what it did. Boom, it bungeed right back up, and it started running again. These are all green days, very bullish candles. Okay, this action right here, see how the price stopped right here, and then all of a sudden the next day it opens way up here. This is called a gap up. Okay, the stock just gapped up. That means that there was a ton of buying in the pre-market on this particular day. Probably had earnings or something like that. Who knows what the catalyst was, but it gapped up and it opened up here. So anytime you see a space like this between the previous day's price, that is referred to as a gap. And just like stocks can gap up, they also can gap down. Okay, I don't see any gap downs. Oh, I forgot that I was doing, but I don't see any gap downs on this particular chart. Let me just go ahead and click out, and just so you can see. Let me see if we have one here. CLSD, right here. Boom. There we go. This is a gap down. See how price closed here? Okay, on August 19th. Wait, August 21st, 2019, and then the next day on August 22nd, it gapped down. That means that pre-market and post-market, man, people sold off like crazy because they found out that something wasn't going right in the stock, and they didn't want to lose no more money. Okay, I just want you to understand, because I'm sure somebody might ask, well, why is there a gap? That's exactly what it's called. It's a gap, and that's because price moved. Okay, so the bottom line is these are candlesticks. And they are great in allowing you, helping you to assess and read, okay, a stock. So, so when you look at this, I just want you to understand those components, those basic components. Okay. All right, here we go. Now, there are names for certain types of candles. Okay, I'm going to start here at the top. This candle here where it opened here and it shot straight up and it closed here, that is the most bullish candle that you can see. If you see a candle like that on any time frame, okay, I'm talking about like a real move. I ain't talking about nothing tiny. You see a candle like that on any time frame, that's a strong bullish signal. Okay, it opened here. It had no wick, no lower, no lower. No one tried to. Oh, excuse me, y'all. I'm tired. It's almost time for bed over here. But it had no one trying to kind of sell off on it, right? It just boom, it opened here at this price and it just shot up, closed there, and it usually continues. Okay, so when you see something like that, depending on the location of where that's happening, this is an indicator for you to hey, this is things getting ready to run. Okay, but the contrary to that, the flip side is this is the most bearish if it's going down. So literally these are always inverse, right? So it opened here and everybody just started panicking and selling off, and it just sold off. There was no upper wick. There was no attempt to go higher. It just completely sold off. Okay. That's an example of it on the bearish side. Second most bullish. Okay. This is known as a hammer. Okay. And it's called a hammer because it kind of looks like a hammer. Usually there's a little bit of a upper wick as well. But what's going on here is they tried to sell this off. Okay, this thing opened here, and at some point in that time frame, it sold off a little bit, but buyers came in and said no, and they bopped the price back up such that it closed here. This is a strong buy signal. Okay, depending on the location in which that is happening on the chart, this is a very strong buy signal, and we're gonna go look at some and see if we can find some. Okay, this is like normal. This is normal. This is normal. You know, it's not a overly strong bullish sign. It just shows that this bullish trend is healthy. These are referred to as spinning tops. Okay, where the body is small. See that this is the body. The body is small and it has some upper wick and some lower wick. It's very indecisive. You know, you can call them spinning tops. You can call them indecisive candles. You don't know. You know, basically we know it's still bullish, but it ain't strong. Okay, this means that some things might be and some change might be coming. And then this is the least bullish, right? Where it opened here, because remember it's green, so it always opens at the bottom and moved up. And then it really ran. At one point, that candle that looks like this now looked like that. But before the candle closed, it began to sell back off. This is another indicator that says, yeah, that bullish sentiment, that the stock is going to keep moving, is kind of, this might be the last hoorah, right? And of course, let's go flip it to the other side. Anything we talked about like this is a strong bearish signal. This is a very strong bearish signal. So you remember this as a green candle, it told us that, hey, it looked like we still wanted to make a run, but it didn't work. But when it's red, okay, meaning it opened here, okay, and at one point they tried to shoot it up, and then everybody sold it off. It got up here and they just kept selling and selling and selling, and it drove the price back down and it closed here. That, yeah, usually means that the trend is over, my friend. If you were long is meaning you were buying that, hoping it went up, you might want to close that position, or at least set your stop real tight, because it's over. Okay, this is a normal bearish candle, as it states. This is a spinning top again. It's just red now. It's down at the bottom, right? It's a reversal, but like people like to refer to this as a reversal candle because it's telling you that there's indecision, that there's people who want to buy and there's people who want to sell, right? And then this is what they call it, hangman candle at the right location. If this is at the bottom of a move and they tried to sell it off and then everybody said, no, we want to buy it here, that tells you that this bearish move, this move that was going down is now reversing. The sentiment is reversing, and you might get one of these type of candles to follow, meaning they're trying to go up. Okay, these are also candles you want to know. This is called a doji. Okay, and this is just, I like to refer to this as another form of a very indecisive candle. Okay, the very small body. We don't know if we want to go long. We don't know if we want to go short. Okay, This at the top of a range tells you that this move is over. This is kind of like a shooting star type of a deal where it's been sold off and the move is over. And this move, this candle at the bottom of a range, okay, is like a reversal candle. It's meaning that people try to set it off and it bought it back up. Okay, they bought it back up. All right. So here we go. Let's go back to Starbucks, understanding that there, and let's see if we can find some. So look at this. Remember I told you this candle here, depending on the location. See, this location is at the bottom of a move. It's a reversal candle that's letting us know that people were trying to buy this back up. The sentiment has changed, and then look what happens. Boom, you get this move, okay? And you get some pretty strong candles here in the bullish side of things, okay? Let's see. Let's go over here. Remember I told you this is an indecisive candle. This is a candle we don't know. What are we trying to do? And so you see what happens. The indecision is there and it sells off, right? And look at this. This is what I just talked about, this candle on the other side of it. So we see that at one point they tried to buy it up. It basically sold off, and look, it moved down a little further, but not very far. But let's keep playing through here. I'm just going to look at more candles. Look at this candle here. This is this is definitely a candle, shooting star looking type candle that's letting us know that this is over. Okay, this move is over because it's been sold off dramatically. It's got a very small body, and look, it goes down, it flattens out, what we would refer to as consolidating, and then it went again. Okay, so these candles, depending on the location, are telling you that a move is coming. That told me a move was coming. That told me that a move was coming in the positive format. Okay, candlesticks is very extensive. Okay, you can read several books on them. You can buy videos just on candlesticks. My whole point is I'm just giving you the basics. All you really need to know is the basics. Okay, but you can lose yourself in candlesticks if you want. I mean, you can take hours of training about candlesticks if you want it, and it will make you possibly a better trader, or it'll make you possibly a slower trader because you don't think you're not moving as fast. When you day trade, you have to be ready to move quick. You got to see price action, okay? And that's just kind of the whole point. But I just want you to understand that these are important, right? Look at this. All this buying pressure at this candle, all this lower wick means that people bought it back up, and look, the move started to the trend changed. This was going down, trend changed for a little bit, okay? So anyhow, this is just very basic concepts of candlesticks. You don't have to overly exert yourself in them. As long as you understand this chart, you are a-okay. Okay, so we're just giving you the basics, the very beginning of it. Okay, now all that's good. It means we got to the end. Here's what I want you to do. Okay, you really need to start going and getting on charts. You need to put yourself, this is active learning. The only way that you get good at this is not by watching. You actually have to do. Okay, this is one of those games where you have to do it. And the greatest thing about this game, and you'll see because I have a series on back testing to teach you how to gain experience without risking anything. I mean, you don't have to risk anything. You just got to sacrifice your time. That's it. Okay, but the homework is for you to learn. If you don't have a charting software, okay, is to go look at a few of these, because you can actually access all of these for free. Okay, and then if you want certain access during market hours, things of that nature, then you have to start paying. Okay, but TradingView, go check out that Thinkorswim bar chart. These are all free, and then if you want actual live access, then you have to. I believe you have to pay for some of these. I've always had TradingView, and I always paid for it because again, if you're serious about trying to do this, you're gonna want to have to you got to expose yourself to it. Okay, so what I want you guys to do is, one, go check out a couple of different softwares and find out which one most fits you. Okay, and then two, look at the charts. Change it from a line chart to a candlestick to a bar chart, so you can see how that works. Okay, how you can switch them, and then on top of that, I want you to I want you to definitely put it on a candlestick and just look at that chart like we just did. Okay, just go through and say, oh, okay, look at how this move happened and what kind of candle presented it. Okay, there's actual candlestick patterns as well. When I tell you this stuff gets deep, it gets deep. For day trading, I don't necessarily hinge my hat on that. I just watch price action. And you'll know what I mean as time moves on, because I'm going to teach you all that stuff. But if you're a swing trader, these candlestick patterns, morning star reversal right here. These are good things. And if you don't understand what I'm talking about, then you would want to buy a book on candlesticks if you wanted to understand that. If you want to be a swing trader that's going to take trades for a couple of days to a couple of weeks, a lot of these things, there's a ton of patterns, but I just want you to go through and just look at them and look at these different candles. Click on 25 or so different stocks, all stocks that you heard of. Let's go look at McDonald's real quick. Let's things that you've seen in your day-to-day life. Click on those stocks and go look at them. Okay, and look, boom, that same move. So you'll start to notice some trends. See, remember that move we saw on whatever stock I was just looking at? I forgot already. But you see how that came here and boom, look at that thing. It jumped up from there, right? Let's see if we can find a candle that was clear that the move was over, like this spinning top right here at a high-low area, a high area where there's resistance. Look at this, another one of those lower wick candles with moves that precede it, right? Not precede it, but follow it. Let me see. Anything else? Let's look at Nike. I ain't seen Nike. KE. All right, Nike. Look at this topping candle. They also call this topping tail. They refer to this wick as either a wick or a tail. So you can topping tail, bottoming tail, whatever. It's the same thing. I just want you to understand that. You might hear it used in a different terminology, but it's the same concepts. Okay. Look at this, bottoming wick, lower wick, and we got a move that followed, right? So I want you to just kind of go through and just you're not trying to be Einstein right now. You just want to evaluate, just openly look at these things, see how these candles move. Look at these, look at this right here. That's crazy. Drop. Look at how big, long this candle is. That means that a lot of people were selling. I want you to just kind of go through those. Let's go with Target. Let's see. Target. Look at you in a nice little uptrend. But let's look at each key move. Look at this indecisive candle, then it gaps. It's interesting. Look at that. Bottoming tail, followed by a move. Bottoming tail, followed by a move. Then it gaps up. So I just want you to just go from left to right, looking at the chart, looking at the different candlesticks, and just kind of getting an understanding on how these things move and why these. Now, you don't have to know the why yet, but just familiarizing yourself. What's Walmart? I forgot what Walmart's. WMT. How could you forget? Yeah. So I always go from left to right, and I just comb through. You always start to notice, though, bottom wick, moves happen. Bottom wick, look at that. We talked about that same candle. Move happens. This is a really good move. Pull back, bottom wick, move happens. Okay. Interesting is when it sells off, it doesn't have a lot of topping upper wick, but we see these moves. It's still there. This one does. Look at that. So anyhow, I can do this for hours. My wife always gets mad at me. I spend a lot of time on the internet looking at stocks because I'm like addicted to this. But anyway, the point is, I wanted to get you familiar with a chart. What is a chart? What's the basics of it? What type of charts are there? What type of charts do the most technical traders use? And the next series, volume 3, we're going to talk about using a chart. And that's what we're going to start breaking down. Resistance and support and resistance, moving averages, different indicators, and a couple different chart patterns and candlestick patterns for you to understand. But I again, price action is king. Okay, price action is king. Support and resistance is all you need. You can be a huge winner if you understand support, resistance. You understand what candlesticks look like, and you know how to use these things to your favor, because this is all about price action when it's all said and done. Okay, all right. With that said, y'all, I think I done talked enough. Don't forget your homework. Check out these different platforms. Which one do you like? I don't want to get you too elaborate. I want you using stuff that's free first and foremost, and then when you really get serious after you showing me that you can back trade and you're doing the things correctly, then I'll say, hey, this is, if you want to be a penny stock trader, this is a software that you really would want to utilize because it's great, right? But until then, we just gonna crawl before we walk. All right, checking out. I'll see y'all next time.